Up a live session. Sorry for the delay. We'll come in. We'll do some planning today. Somebody asked me a question yesterday in my afternoon session. I did this yesterday. I hope you had a chance to check it out. My anatomy of a trade segments. Let me go to this right here. How many of you joined me yesterday for this? We did the session around 1:30 p.m. We blended this. I think we did this for like 2.5 hours yesterday. We were long. I'm sorry. We started the session at 1:30. Anatomy of trade. We covered a handful of strategies, and then we got into the close and just kind of explored where things were at for the close of the day. We finished the day pretty much right at the NVIDIA high, the NVIDIA candle high from last Thursday. Futures up today. There's a couple of gamma levels I'm looking at. We're going to watch some flows. Okay. So if you didn't have a chance to check it out, it is on my YouTube channel, youtube.com/Chris Pulver, or youtube.com/Financial Wars. I stream this also on Facebook and on LinkedIn and on Twitter, all over the place. So check that out. We're going to do another session today at 1:30 p.m. as well, and we'll cover some more strategies. If you have any strategies like we discussed, we did long calls spreads yesterday. We did long puts and spreads yesterday. We did ratio spreads. We did butterflies and iron butterflies. Today, I'd like to cover the diagonal spread. I'd like to cover, I'm trying to think, maybe just some simple covered calls with the collar trade. We can get into some other crazy ones too, but yeah, I mean, it's just kind of giving us the little arsenal of like just understanding the basic trade and then understanding how a lot of these funny strategy names are just combinations. A jade lizard is a silly name for a chart or for a play that all you're doing is you're selling a put. It's a naked put. You're willing to own the shares at a lower level. You sell that put, and then above you do a bear call spread. So that is essentially a way to grab some extra premium out of selling a put, which is where you're wanting to own an asset, but then you do a bear call spread above that. It's just a combination, but it has a stupid name. It's called a jade lizard. So that's the nuanced stuff of option trading. But really, it's just, do you understand what this trade is as a combination? A lot of it is just combination spreads with silly names. Okay. The slides posted as well. I don't think so. Not I can save. What I'll do is I'll put together for the notes we take from yesterday and today. I can put that into like a basic ETF or not ETF. Yeah, I'll form an ETF. No, a PDF. Sorry. I can create a little PDF and have it available, and I'll see where I can get it posted. Okay. So you can check out, see, it should be posted on my YouTube channel, youtube.com/Chris Pulver. And go to, we are live right now, but if you go into the live post here, this would be, if I highlight this one, pretty sure this one for 2 hours and 33 minutes yesterday. Let me change this one really quickly. I'm going to go to my studio and I'll put the thumbnail in. So we are talking about this one for 233. Nice little turnout there. And then I'll just edit the thumbnail first. I'll come back and fix the stuff in the studio later. There it is. All right. Now we'll go to my channel. So you should see the thumbnail if you go into the live section, live section, update. Anyway, I'll just share the link. How about that? You want to check it out? You can come back and join me again today. So here is Anatomy of a Trade. There's the link for that. And I'll send this out to everybody. There you go. So there's the video link or my YouTube channel, youtube.com/Chris Pulver. Okay, good stuff. So today, here we are. Let's recenter this thing. I was a little bummed yesterday that we couldn't get filled on a broken wing butterfly. That needed to happen a little bit earlier in the day when the market was up here by about 12:30. Had we been retesting had we been to the highs of the day by like 12 or 1 o'clock, I think that broken wing would have filled around the 80 to 85 that we put in. We had two broken wings. We had one that was a pin price around 80, and the other one was a pin price at 95. It didn't quite get to our VIX calculation, and and that's fine. We still won the day yesterday. The VIX retreated from a 21.7, which is where I calculated, and we almost got there. If you look at the price action for the day, we go back to this chart for my daily profit indicator. If you look at the price action for the day, you take the closing bell price and you go up your 2177 is your VIX number. So 2177. So 1.36%. Okay. You take your close, go up 1.36%, and it was 67.95. That was our calculation. And we got to a high of 77. Now, I would much rather be able to play my defense, and price didn't actually get or exceed my highs, because clearly I would have been maybe having to adjust that calculation. So this is the nice thing about using the daily profit indicator and using the VIX intraday, because you can get those defense trades. Now, the better trade yesterday, to be fair, is if the broken wing didn't fill, if you wanted to consider a bear call spread, maybe that has a better chance of getting filled versus the broken wing butterfly. But again, you're taking on more risk with the bear call spread if you want to sell the top, because you have only the credit that you take in, and then the rest is all risk. If you did a broken wing, you at least have a profit trap opportunity trying to pin that thing at that VIX calculation level. So let me see if I posted the result in my ATR tracker in the daily profit play. By the way, I need to update from yesterday. I didn't put our winner in there. So we had a trade number 530, 1125 expiration. We opened up around 66.95, 25 expiration. So we had a 66.50. It was a 67.50. Sorry. So we had a 67.50, 67.55, and then a 66. It would have been a 20 yesterday, 66.20 and 66.15. So $5 width, pulled in $1 credit, closed it at 50 cents. Nice little winner there. And we were at 89.1% winners, 474 wins in the service. Not too shabby. Now I will take a screenshot. Let me recenter this bad boy. So 1125, closing price 67.65. What's crazy is how wide this 50% moving, or this 50% ATR was. I mean, things really widened out a little bit based on the ATR calculation. We're still right at, so we MMM move was plus or minus about 40 yesterday, and the market closed. We had another run to the upside. So we opened pretty much at the close. We ran all day. This is the opening bell price. We ran up around 70 points on the day, 70 points higher, failing to contain the expected move, but we still logged a nice winner. Did price stay inside the 50 ATRs? No, but we won the day. And more importantly, that's what I want to see. Can we win the day? And then I'll take this link. So this is in my members spreadsheet for our daily profit play. There is another tab on there called ATR tracker, and it's not super important. It's more for my reference, just kind of taking some notes. And, some people say that trade journaling can help, and I'm just trying to note what we talked about. And if there's things we need to learn from, we'll have a reference point of all these days that we trade. Okay. So today is the 26th. Let's recenter this thing at 67.65. VIX is down to 18 or so, 67.65. We are going to gap a little bit higher today. You can see here the VIX way lower. VIX is sub 18 now, so my yellow box is much, much, much lower. We'll keep an eye on the dynamic VIX. I do have some gamma levels I want to talk about. So VIX I'm just going to calculate an 18 right now. That's going to be my rough calculation. So about a 1.12% move. Could be a drift. Could be a drift higher. Okay. VIX has had a big crush to the downside. Pre-market's up a little bit. Futures up about 0.28%. We'll keep an eye on that. Let me go back to SPX here. So I posted this in Telegram yesterday. This is the all-time high at 69.20 and change. Okay, this is the NVIDIA sell-off candle from Thursday last week. There's your high, there's your low. If we are up above this through the close today, that's totally fine, right? This is a good spot for open space, and the bulls continue to have this path of least resistance to possibly retest the highs. Am I questioning that the market has the ability to keep pushing higher? I mean, I'm not calling the top here. I'm not calling the top, but I don't think it'd surprise anybody if we come up to these highs and maybe turn before we hit all-time highs, or we get to all-time highs, celebrate all-time highs, and then come right back down where these levels like this low, this low, this high, it's like prices just aren't able to get dramatically higher. And prices may not get dramatically lower. It's like we might just deal with a 5 to 6% range right now. But what I keep kind of warning of is this a distribution cycle? Okay. Because if we go to the highs, then the head and shoulders pattern is off the table. Okay. That's a good thing. But that might also evolve into a potential double top. So if we come up here and we fail, a double top is just as damaging measurement wise as a head and shoulders. You take your high to low, you take your break of that support level, and we're still looking at a measure move down to like 6,000. So it could be just as damaging, but it also might just be sideways and sideways and sideways for the next 60 days until we get to the end of the year. Okay. So I like the fact that this market is recovered aggressively since the Thursday sell-off. Certainly feels a lot better than what we saw for 9 days of indecision after a tariff tweet. So that's a good thing. All right. And the VIX has come down quite a bit. So we'll see what the VIX does today. I'll calculate highs and lows. Right now, gamma-wise for the morning, positive gamma is above 67.35. You can write that number down, 67.35. As long as we stay above that for the day, things are looking pretty good just to stay, sells, puts are being sold and calls are being sold, and the market's just going to stay in limbo. Today would be a great nothing burger day just because it's the day before Thanksgiving, no major surprises. A slow melt up would be fine, but just keep it within the expected move, right? I mean, it'd be nice to keep it within the expected move. Let's go to SPX, check out and see what we have for today. Expected move from what I'm seeing on the day. Do I need to log back out? All right, let me log out, log back in. Give me a plus minus in your charts. If you got Thinkorswim or Tasty up right now, what's your plus minus reading for SPX? I'm guessing it's going to be like sub 40. VIX has come down quite a bit. We're sub 18. Let me know what the plus minus is in the broker platforms. Okay, 35.04. Okay, 31 on Thinkorswim, 35.8, 30 plus. Okay, 35.8. Okay, good. All right. I am probably going to trade this one pretty conservatively. 1.12. Just to be, I don't know. I mean, 10 deltas have been working really, really well for us. The issue is a plus or minus 30 that gives me a pretty big space. If I go like, let's say our 10 delta this morning for daily profit play is going to be 45 or 50 points higher, 45 or 50 points lower within the expected move, that should be great, right? Like normal day should be great. For a holiday drift, if this market goes, let's say it goes, 0.45%, I'm talking about a VIX level that could be up to 1.12 today. So we only need a move of, we need price to basically stay within 0.5%. If we get anywhere close to the VIX level, that does leave like a pretty wide area for defense. So here's what I'm saying. If we calculate out, like I'm estimating that roughly my VIX is going to be 1.12 based on like an 18 VIX. Okay, if we see the VIX going lower today, 18 is likely going to be a safe high and a safe low. But if the plus or minus on the day is like 30 points, 31 points, that's a tiny move. Okay, 31 points. 31 points is about 0.47%. So let's say we have 32 points right here. Okay, right here. And we have 32 points right here. Okay. Now, I am going to be calculating out a VIX-based move that is going to be way more than that. My VIX move from the close yesterday would be up to 1.12, which is 75 points. So that means that I somehow need to account for a 40-point defense level. And that makes my standard daily profit play like pretty tricky, because even if I'm 40 to 45 points out of the money, 50 points out of the money, I'm still 20 to 25 points away from the VIX top or the VIX bottom. Does that make sense? So because we've had such a crush in volatility and the expected move is way lower today, any type of positive drift to the upside, I think the market could easily get 30 plus points. And I had a question that came up yesterday in the afternoon session. Chris, the market makers, they haven't contained price for a couple of days. It's true, but this holiday trading week and this recovery post Nvidia, it's almost like they're just taking all the extreme put sentiment, rolling this into where the call flows are going. And I don't know. I mean, market makers, if they're wrong, they are rolling risk and hedging to still be delta neutral. So if it looks like, oh my gosh, the market makers didn't do their job, they're still hedging somewhere. So the side of this market that's taking us to the upside and hitting these higher moves than expected, they are buying calls easily. They're buying calls to neutralize their position. So they're not wrong. They're never wrong. But they will roll risk. And so it is unusual for them to have multiple days in a row where they don't see the market maker move like contained. So today could be one of those days where it's just a big nothing burger and the plus or minus is maybe 30, 40 points. But if we have a wild open like we did yesterday, the market had like a 50-point swing several times. I mean, it doesn't look like much right now, but you come into intraday charts yesterday, this was no joke. I mean, we saw some crazy volatility yesterday. This market, from the open, we opened here, had a high to low of about 53 points. We had a low to high right back up about 60 points, settled in. Our trade was closed out by like 11:15, 11:20 yesterday, which is great. But from the low to high on the day, it was a 115-point move, right? From the opening bell, we still moved up 70 points from what was expected to be about 40. So this drift is no joke, right? So what I'm saying is I want to be conservative today on the deltas. And I will say that since we're here at 67.65, we're going to open up a little bit higher with a gap because the future's at 0.34. We're pushing up about 0.3%. Based on this close, we're going to be up to around 67.86. Now, my gamma wall is around 68, and my biggest gamma level is around 68.25. I do not want my call spread to be below 68.25. I don't. So honestly, I think that maybe the safest trade today is we're gapping higher. I might want to see if I can sell some premium down here at these low levels. It might be just a positive drift type day. I don't know. It's going to be an interesting day, I guess. It's just with a low expected move, there's just a lot of buffer from selling an expected move and then going to my like calculated highs and lows. So it almost seems like my easier trade today is to calculate my highs and lows and just put a credit spread at those highs and lows and let price come find them. If price is going to drift up, at least I'm calling the top with a mathematical calculation versus market maker expect a move that they fail to contain for another day. And because it's holiday trading right before Thanksgiving, markets they're just kind of disrupted. Yeah. Okay. Does that make sense? We split the spreads are still doing iron condor. Um, I think I'm just going to do. I think I'm going to do a bear call spread and a broken wing based on the VIX and just kind of let price be price for the day. I'm as curious as you are. Like I want to kind of note the 10 deltas, but a plus or minus 30 with an expected move based on the VIX could be like a 70 to 75 point move. That's hard to play defense because if price moves, 40 points, I lose on the daily profit play, and my defense levels are 70 points higher, and they never get filled, right? So I think the safest thing for me to do today is combination of let me calculate based on the VIX, calculate my highs and lows, and have a bear call spread up at those highs or a broken wing butterfly, and just kind of let price do what it needs to do today. Okay. I just don't want to take any chances on us getting like a holiday drift and we're like, oh man, the market maker, yeah, they might not do their job today. It could be easy for the market to keep ripping to the upside. We are in positive gamma. So if the market's just playing catch up and this is open space back up to these highs, if we're taking out this Thursday candle sell off high and we're going to drift up, it's like there's nothing stopping this thing. Look at this gap, by the way. This gap getting filled, this market might be very deliberate on just getting up to that gap. And that's going to push us, into territory that would probably be more than the expected move. So probably going to be a little bit more conservative on my trade today. It's not it's not a normal trading day. The day before a holiday, even Friday's trading day, it's not a normal trading day. So I just want to kind of throw that, caution out there, like trying to sell premium at the tops and the bottoms within the expected move. That's like maybe the market doesn't respect it today. Okay. So I'm cautious from that standpoint. I think we can still safely kind of have those highs and lows calculated, and we can put in a trade. That way, if price does drift higher, we could still get filled and hopefully have a winner on the day. If it doesn't fill, it's an okay day. It's an okay day to not have a trade, and I'll be fine with that too. So, all right, we have just a couple minutes for the open. All right, so futures 0.35, NASDAQ futures 0.56, Dow futures up 0.2, Russell futures down slightly, but Russell's had a big comeback. It's interesting. So S&P and NASDAQ up, Dow is up. Positive gamma above 67.35, gamma levels 68, 68.25. We're going to open up higher because of futures. We'll take a look at the expected move. Here's my, get out of here. Here is my plus minus on SPX. I'm showing a plus or minus 35 on Tasty right now. Okay, and this will change at the open. Volatility has come in quite a bit. We're sub 18, but we'll get our deltas here in just a moment. Okay, so I'm gonna hold. So I'm gonna do a VIX high and low based on the 18. So here, 67.65. Calculate out based on an 18 VIX. We are going to gap higher by a little bit. So I'm gonna measure my high. I'll go from the low will be my closing bell price yesterday, and I'll go 1.12%. So that's around 66.90. Okay, and if that VIX is above 18, you have to recalculate the low. Okay, we're going to gap higher. So I'll get a price feed up here. There's my gap. And I'll go 1.12 from here. That's around 68.70. 68.70, high, VIX at 18. Okay, so that's my potential high and low. We're opening, you can't really see it. It's just a sliver of a candle right now. We're opening up right here. So I'm going to keep an eye on the VIX. Let me set a chart alarm at like 18.25 and just see if we're actually going higher. So if the VIX is going up, I want to know. If we take out this level here, that's 18.75, we'll put a couple chart alarms on the VIX to see if we're going higher. 67.80. Yep, so we're up. We're pushing green. VIX is 17.94. Keep an eye on that. All right, we're officially above the NVIDIA candle. There's another gap up here. 68.28, fill the gap at 68.51. The market could be gunning for that today. My calculated high is around 68.70. Let's see. So if I went like 65 by 70, I'm going to throw in a broken wing for today. So right now, delta wise for a standard daily profit play, it's crazy to see this expected move is so quiet. Now we got a plus minus 25 in the day. It's really low. 10 delta, man, I don't even love this. 68.35. If we fill that gap, that's in trouble. Um, Positive gamma is above 66.95. I'm sorry, 67.35. So here's what I'm going to do. I'm going to throw in a combination, either a bear call, and then I'm probably going to double down. I'll do like a bear call spread for 5 wide and a broken wing butterfly, which would be similar, risking like $4 to make one, and also have my profit trap. Okay, so 68.70. VIX is at 7. I mean, we're retreating again, so we're getting a lower VIX. I think the 18 calculation is pretty safe. No funny business. Obviously, I'm calling the top. I want to be a safe top. Let's go based on this calculation. 68.70. I'm going to go 65, 70, and 80. 65, 70, and 80. That gets me a break even at 76 if I pull in $1 on this thing. So 65, 70, and 80. Let's see if we can get $1. This will be $1 credit. Okay. And then in between there, I'm going to do a 75 by 85. And that's just going to be a bear call spread. Actually, you know what? I will do. How else could I structure this? 55, 60. There's no reason for me to get in the way here. I could put another broken wing in if I did a buy, sell, but then I have to go wider on the skip. Now I'm risking nine. I'd be risking $900, but my break even would be, this actually might be a little bit better. If I go 10 wide here, my break even is 70. Let's see, what would this be? That'd be risking maximum $400 there. This one's not too bad. That gives me a break even of 70 plus the credit. Let's see if I can pull in $1 for that. That'd be buy, sell with 2 contracts, buy. Yeah, these don't overlap. This is good. So I'm going to do $1 credit on this trade as well. All right, a couple of pending orders. These are going, I'll put this in the Zoom chat. This is not a typical daily profit play. I'm going to pass on the typical daily profit play. If you want the typical daily profit play, you're looking at like a 68, 40, 45 on the call side. You're looking at I'm looking at like the lower deltas that I'd like to trade this morning. You know, I'd say 35 or 40. It's okay, right? There's a 40 by 45. And then you're looking down here to 10 delta, the 30 by 25. You know, it's only offering 70 cents right now. I wouldn't take that trade for less than $1. If you want to increase the credit, you got to go higher deltas. You know, if you think this market's going to drift higher, use a higher put delta. You could skew it a little bit where you go, 9 or 10 delta call side, and then like a 14, 15 put side. It still isn't offer $1 for 5 wide. So play around with your strikes if you want to do a daily profit play. I'm going to pass on that. I'm just going to see if I can, kind of contain the high and low today. So I'm putting a couple of broken wing butterflies. So I'll post those trades here in the Zoom chat. Yep, gap fill at 68.30. I agree. That's where I want to stay above. And the gamma level this morning is at 68.25. So whatever you're selling spread wise, I would feel very uncomfortable if I had a bear call spread at like 25 or 30. I'd feel uncomfortable if it's honestly at 40 or 50. It almost has to be above 50. Just because if we come for this gap fill, that's all the way up here at 50. If we calculate out our VIX, that could stretch up as high as 67, 80. Okay. So I'm going to see if we get filled on a broken wing. I'll post both these trades. This is two. I'm just going to put in parentheses tops for today. So one of them is today's expiration is the 26th. Give me 1 second here. Today is Wednesday. All right, just got to do something real quick. All right, almost there. Cool. All right. All right, here we go. 11:26 expiration. Buying the 68.50 call. Selling 68.60 call. That one is that's a great trade if it gets filled. I think it could be difficult to get filled because I'm going with a 10 wide profit trap. We might just have to revisit looking at some bear call spreads instead. But if it does get filled, it's an awesome trade because you get $1,000 profit trap. Your break even is still at that 68.70 level. And if you pull in another dollar, it's 68.71. But we'll keep an eye on the VIX. 60, so 50, 60, and 68.75. So I'm going after $1 credit pending. There's one trade. I posted that for everybody. And then SPX 11:26 expiration. Buy the 68.65. Sell the 68.70. And buy the 68.80 for $1 credit pending. All right. So those are broken wing butterflies that are pending. If you wanted just to simply sell a bear call spread, right now it's trading for next to nothing. A 70 by 75 is trading for 5 cents. If I let this thing sit for a 5 wide and let it sit at 50 cents or $1, it's a high probability win. You just need price to go higher. Okay. If today is just a big nothing burger day, then I overthought it. I didn't take my low deltas. I just didn't love that we've been seeing, 40, 45, 50 point moves expected. Now it's down to 25, 26, 20. It's in case we have a drifter day, there's just too much breathing room. If we get to the expected move and it's right here and price is going to drift higher today, there's just too much room to get up here. And it costs me, a little bit more money to defend this level versus just put in some broken wings because my broken wings are designed to be at the VIX top. Okay. Not the 30 or 40 points in between my, 10 delta and my VIX top. That's a hard defense trade. So I'm just going to be cautious. Okay. When you close it, if it never fills, then it just automatically cancels. So you have to worry about doing anything. It's like if it doesn't fill, there's no trade. The broker just removes it end of day. All right. What I'm going to do is this. I'm going to watch. I'll do the same thing at the lows as well. I'll calculate out the lows. I don't think we're going to dump today. If we do dump today, the VIX is going to jump. So if the markets are going to go up, then we just have that slow grind. Keep an eye on that for the morning. If we come back and gap fill today, the VIX might spike up above 18. So I may have to calculate out my lows a little bit differently. So I'm going to hold off on actually calling the lows right now. I'll just kind of let price, run through the day. So let me set a chart alarm. I will go, let's see if we hit, VIX box high around 42. And that's based on the close yesterday. I tend to take, this is the safest way that I do it. I did this in the 2-day masterclass, which is we take to be more conservative and slightly safer is if we have a gap higher, you take your gap higher and your VIX move, right? So today, because we gapped higher, I take the gap plus the VIX move. And then from the downside, I take the close and the VIX move, and that gives me the biggest possible space based on the real time VIX. Okay. All right. Let's see. I'd like to take a look at the pinch point scanner today. VIX retreating. I'm going to set this down. Let's go like 17 VIX. I'm just curious if this just keeps dumping. 17 VIX would be kind of nice to see that, nothing dramatic is going to happen today. Currency wise, we had a big it was a hawkish cut, I guess, from the RBNC yesterday. A lot of volatility in currencies. New Zealand did really, really well. That actually helps me survive this trade. So I've been short. This Aussie New Zealand is actually finally starting to turn over. I'm going to see if I can get this thing back down into some inefficiencies. I'm trying to take it down to like 1200. All right, credit. Yes. Is that a question? Like, you see the trades that I posted for everybody, right? You can see the same thing I see. Pending order for a credit. Yeah. So they're pending orders. They're not filled. They're trading for like literally 5 cents. I'm not going to take the trade for less than $1. So realistically, today might be a day that I don't get filled. But if we're in open space here and the market's coming after this gap, if it does it somewhat aggressively, which would be nice, if we do it somewhat aggressively, we could get filled on those broken wing butterflies. Do I think that they're in good spaces? Yeah, I think they're great. It's just if it's a slow, let's say today is just like super choppy, and then slowly drifts higher, it might not be moving fast enough to get us filled. That's okay. All right. I always butcher this saying, but basically it's like it's better to, not be in a trade and wish that you were versus being in a trade you wish that you weren't. So I don't want to put myself in any type of danger if the market maker is going to let prices just drift through a holiday. And I know it's technically not a holiday today, but markets are certainly a little bit less liquid and there's a lot less volume. And we've just seen a big vol crush. And so I'm a little cautious that this vol crush is like just a flare up. All it takes is a flare up, and all of a sudden we have price, outpacing the plus or minus on the day. And I'm okay having, already a solid week. I've sold a ton of premium, took advantage of this higher VIX last week, and it's okay. Like I'm happy where I'm just kind of positioned. I don't need to force a trade today. If I'm right, let's be right at a great spot versus thinking, well, if the market's going to drift above 30 points higher today, then I'm toast on daily profit play. So that's my least favorite thing. I can tell you that with absolute certainty. My least favorite thing is to place a really good daily profit play, even with a lower delta, and lose. I hate it. So I'm gonna kind of call the top today and see if I can get it correct. As long as the VIX stays below 18, that top should be pretty safe. The bottom, I don't necessarily have to call the bottom right now, because we're probably not going to go down. So, if you want to be more aggressive, you can sell some puts and see if the market goes up to 68.25 and grab some partial profit. All right. So I got to ask, how many of you are taking daily profit plays right now? Just doing your standard daily profit play, bread and butter, 15 deltas, 10 deltas. Just let me know, because right now, if I look at it from a delta neutral, we're looking at like the 40, 45. I'm just going to humor myself here and do like the 10, 11 deltas. This would be, so 68.40. I'm just going to put a couple lines here. 68.40. So that would be my call side, and down here to 67.40. There. So that would be our daily profit play on the day, going about a 10, 11 delta. More than likely, right? If price stays below this and price stays above this, it's a winner. All you need is price to do this for, 30 to 60 to 90 minutes. You got a nice little winner on the day. It's very possible that that's the day. Totally possible. So what I am noticing though is right now I'm not taking this trade because it's not even offering the credit that I would want. So the only way that I take this trade is if I put these strikes in and I'm asking for $1, it's only offering 80 cents. So there's another reason, like if I put the trade in, I would literally be sitting waiting for this thing to fill at a buck, which means price has to move. Either price goes up and fills me on the call side because the delta gets bigger, but I like where it's at right now. I'm not going to take this trade for less than $1. So a couple things I'll keep an eye on. Does this trade fill for $1, number one? And are these strikes going to be safe, number two? It does. I mean, the expected move today, there's still a lot of skew in the market where you're way closer to the expected move on the call side than you are the put side. And I mean, to be fair, it's like there's so much pricing skew where it's like, look at how much more for an 11 delta put, you get 295. For an 11 delta call, you get $1.60. That's a massive difference in price. So put premiums right now are still expensive. But this is why I trade it delta neutral. So if I ask for $1, the broker says you can get 70 cents on the trade, which I wouldn't take the trade. It's like I ask for $1, I put it pending at $1, and if it fills, probably a good trade. Yep. Yeah, we saw that. We saw that a lot during the holidays. We did have a couple. I remember Christmas, like Christmas week of Christmas was especially difficult. We had it, and again, we didn't calculate the VIX stuff like we do now. That would have helped us survive the day. But same thing. It's like, it's okay. It's okay to not force a trade. I know that my standard daily profit play would not be filled, not yet, because I'd be asking for $1, so I need price to move. The only way this is going to be a good trade is if you're going a little bit more aggressive, like at the money or at the expected move, and now you're talking, okay, there's my expected move. I get $1.40 to $1.50 of credit. I'm risking 350. If price is a big nothing burger today, right? If this is just an absolute dud of a day, then that's a winner. So take your, take $50 profit out of this thing. $1.50 decays down to $1. Take the winner and move on. All you need price to do is be quiet. But if there's any direction, you threaten the call side. If there's any direction, you threaten the put side. I'm just trying to avoid that today. Chuck, is that like your performance daily profit play for the SPY up 25%? So are you saying your daily profit play? That's great. 68.45 and 67.30, Ernest. Okay. How much how wide did you go? Did you go 5 wide? Okay, Davis says I took your 2, then placed. Spreads are terrible. Yep. Let's see. Davis says I took your 2, then placed a credit spread 68.55 for 75 cents. Did you get filled at 75 cents, David? Asking for, okay, so you're not in yet. So you're asking for a buck. That's good. That's good. Like, ask for the credit. Get the $1. I want the broken wings at $1. They may not get filled. It's okay. Okay. All right. So we got that going on. So I'm just going to make a reference point here. If price gets back up to what's kind of crazy is like, if we fill this gap, that would be threatening my call side on daily profit play. If we do this morning and we do this aggressively enough where price is just kind of drifting kind of straight up, even if it's slowish for the next like 30 to 60 minutes, if we are going up to fill this gap, that broken wing might fill. And if that broken wing fills for $1, that is a pretty high probability dollar, and also having a $5 profit trap as well, which I would not mind at all. So, before the day is done, we might have the ability to get in and maybe still grab some bucks. I like the trade, but I'm just trying to be conservative on where it's being placed. Max loss to the butterfly. If you did it the way that I set it up, it'd be a $400 max loss. So the way that trade is I'm trying to get $1 credit. Okay. And then you'd have a $5 profit trap. So max profit would be $600. And the max risk would be 400. So more than likely, if the trade fills, A dollar is what I expect. A dollar is what I'd want. A dollar is most likely going to be my winner. There's a profit trap if price is going to stay right there at the high for the day and close within that kind of calculated profit trap zone. If my pin price was what I say my high was going to be 68.70. So if my pin price was 68.70 and price is at 68.71, I make $400 bonus profit plus my dollar credit. Okay. If it's 68, 50, I keep the dollar if it gets filled. If price falls, it's not going to get filled and there's no trade. If the VIX goes above 18, what I'll be doing is possibly watching for a low today and just calculate it based on a dynamic VIX. So if the VIX stays less than 18, this is a pretty safe low. If the VIX goes greater than 18, I want to adjust this lower. Okay, how would a broken wing 5 wide? You can't do a broken wing 5 wide. That's a butterfly spread. You can't do a broken wing. You got to skip. So you're talking like 68.50, 68.55. You got to skip. You got to go like 10 wide on that the other leg of that trade. The other wing has to be a skip strike. Yeah. All right. Anyway. Okay. So look, the trade's going to hang out. Chart alarms are set on the VIX at 18. See if we cross back above 18. If so, I'll make an adjustment and consider maybe putting in a bottom trade today. For fun, even though this is the level that I would be trading. Okay, this is the level I'd be trading today based on the 10-11 deltas, but the credit offered was about 70 cents. I'm not taking that trade. So even if I did everything I wanted for daily profit play, it's not getting filled for a dollar. Therefore, I'm not in the trade yet. So price has to do something in order for that dollar to get filled. All right. And that's okay because it's still a high probability trade. A 10 delta is roughly a 90% chance of profit. What I'm doing up here is like a 99% chance of profit. The question is, are we going to get filled? Because it's obviously way out of the money. So price has to do this, and we have a chance of getting that thing filled. Okay. All right. Okay. I'm going to grab the pinch point really quickly. Let's see here. Let's go one click trading. See how many stocks we got lined up for pinch point. All right, let me get a little audience poll here. How are you feeling about this market right now? Is this are we like all in consensus? So like this is risk on again? Do we have any ounce of caution? I'm just curious where everyone's kind of temperature's at right now. I think that at best this is just like the market's not doing a lot of damage. We're probably going to go sideways. I think this market might just not really suck, not really do anything outrageous. And that's kind of good. Like it contained itself. It's not really going to get back to all-time highs with much conviction. If there is upside risk, awesome. Honestly, like if we break all-time highs and rip higher to 7,000 plus, bring it on. That makes every waterfall trade easier to manage. That makes every waterfall trade, 50, 60+% profit or better. That's great. I just think that right now with like two massive sell-off candles, there is some indecision structure that I want to pay attention to. So let me see. Expecting sideways, but very cautious. Race to Christmas. Okay. Don says I'm selling, holding back, sideways, risk on, totally cautious. I'm bullish, feeling bullish. Pinch me. Okay. Let's see here. Expect sideways, but very cautious. Sideways into January, then down 20%. Wow, Jeff, that's bold. Okay. If Ukraine situation gets resolved, the market will go up. Really? You think Ukraine's that big of a catalyst in the market? I don't. Ukraine's been happening since 2022, man. I don't think Ukraine gives the market any real push. If anything, I'm just curious, like, does it do anything to oil prices? I mean, oil prices are down to $58. There's some structure down here at 55. I've got futures trades down to 50. I think a resolution is like, it's just been waiting on, we've been waiting on a resolution for a while. It's like that war started in 2022. So I don't know. I'm skeptical that's going to be a big catalyst for the market. Today's market will chop, long if it could. Quiet day. Yeah, it's all good. Okay, Jeff, I got to ask you a question. If you think the market's going to go down 20% in 2026, are you buying the dip? Or is it 20% and it's just like the end of times and we're going to be looking at 30, 40, 50%? How bearish are you? Is it a flush out deleveraging, chance to buy the dip? Scale in? Okay. All right, fair. We'll see. I mean, the 200 moving average is a 10% correction. So, why am I cautious? Here's some of the technical reasons. This low and this low to me are forming a head and shoulders. Left shoulder, head to neckline, even though we're up above this today, depending on what price does. Obviously, I want to see price stay above Thursday's or last Thursday's candle. Okay. So if today is just up here in the middle of nowhere, we have a gap right here, right? But if we come back down inside of this NVIDIA candle, I'm cautious. I think the head and shoulders pattern actually remains intact. If we don't get back to retest the highs, this is a head and shoulders pattern that could still be valid. Okay, let me go to a cleaner chart. So maybe a little bit easier to read. Let's go SPX here. A little bit cleaner chart. So this is the neckline. Okay, so left shoulder, head to neckline. If we get to the highs, this is no longer head and shoulders, but it evolves into a potential double top. If it breaks to go slightly higher, it could be evolving into some type of broadening pattern. Okay. I am thinking this market is at best sideways, but no more than like a, 5 to 10% correction and no more than like another boost of 5 or 10% higher. I think we're going to be kind of stuck in a bit of a range until the market has better clarity on, okay, if the Fed's going to cut in December, what about January? What about March or April? Powell is done in May. His term is officially done in May. Who's the replacement? More than likely, I think the Fed's going to be cutting another 3 times in 2026, maybe more. You can look at that probability as well. Thanks, Chuck. How much can you make with one butterfly contract? If I get filled for $1, make $1. So if I do the trade that I put in the chat, if that gets filled, I get $1 credit, and my likely winner is going to be a full $1. I have a profit trap. If it's sitting at that pin price, I have a $500 profit trap there too. So I can make up to $600. Okay. So technical outlook, head and shoulders pattern is what I see. If price is going to push back down inside of the NVIDIA candle, I'm cautious in here. Okay. If we break this neckline, then measure symmetry. High, low, lower high, lower low. Measure symmetry. If it's a head and shoulders, there's 2 measurements here. So if you go high to low, okay, there's 2 measurements on a head and shoulders. You can measure symmetry, and let's just say that today is the top for whatever reason. If today is the top, we come back down here, symmetry is around 6,400. Okay, but the break of the neckline would be a measured move of you break the lows. Okay, you break the lows here, and you're looking at a measured move of around 6,130. So either a 6,400 symmetry trade, which could also look like this: high, low, lower high, lower low, lower high, lower low. We still get to the same type of desired move. It might just be coming in waves. But if this is going to tag the 200-day around 6,130 to 6,150, that also tags the previous all-time highs. Okay. I would be interested in, number one, selling a bunch of premium at like the April lows or below the April lows. If we're down that far, I'm selling a ton of premium. On top of that, I will be taking some stabs with defined risk to see if this gets back up to the highs. Okay. So if we're going to slide lower, those are my 2 levels, 6,400 and 61.30 to 61.50. The market has to prove it. Until then, we're still holding this. We're back above the 50-day right now. We're holding the 100-day. These are the dailies. If you look at the weeklies, VIX is back above 18. Yep, you're right. 1806, which means my top. I may need to make an adjustment on the top. But if the VIX is going up, we're probably seeing price go down. So let me make a small adjustment here just in case. Okay, if I take the VIX at 1805, let's just make sure this VIX isn't ripping higher. 1805 is not really going to budge the numbers too badly. So 1805 divided by 16, 1.12. That's a 1.13. Take the gap. So my high is still 1.12, it's still 68.70. So right now I don't really have to budge on my. Yeah, we're still at 68.70. So the pin price doesn't have to change. We start to see the VIX at 1850, 19, then we'll change this potential high. If it has to be one strike higher, we can modify it. Okay. Lean short into Christmas, sell the high. Okay. It's a lot of conviction out there just to throw the market in as a sell. I mean, so my question to you, Don, is how? How do you sell it? Are you taking like an at the money sell and trying to get a good reward to risk? You doing debit spreads? Um, I mean, one thing I don't love to fight is typical like historical seasonality, which is this market might not have any volume. It just might go totally sideways. So it also might turn into like, you know what? The flows keep coming. Earnings are still solid. Market's up to highs. Congratulations. Happy holidays. The market's at all-time highs and won't stop. That holiday drift is very real. Like, is the market going to care enough to actually, big institutions and big liquidity providers, like, do they care enough to actually like control this market through the holidays? Or is it going to be finding direction one way or the other and it just stays in a direction? It's easier to stay bullish because that's where the drift is. To the downside, I mean, nobody wants a December surprise, right? I mean, in my opinion, the December surprise would be the Fed somehow doesn't cut rates December 10th and the market absolutely hates it. And it's such a low volume environment that the market like overreacts. And then the Fed steps right in January, says, we're sorry, we're going to cut rates. But that's where the big pivot was last week. Big pivot was now the Fed's expecting a rate cut or the market's expecting a rate cut. And most likely that's going to pacify the needs for the traders. Because, I mean, look, we're down just under 6% and the market had a tantrum. So it's just crazy how sensitive everything is. If the Fed's not cutting, if we're not spending money, if we're not just pushing this thing higher, it's just going to stay this like zombie market, positive gamma zombie market, right? We stay above 67.35. Nothing breaks this positive gamma flow right now. We stay above this gap at 67.65. I think today's just a big nothing burger. Okay. All right. Just curious. So we got some mixed, some bullish, some cautious. Interesting narrative on being bearish. I'm just pretty neutral. I think that really this is a good spot for price just to do what price does best, which is it might not deliver us any surprises. If I have a surprise, cool. I mean, let's be ready for it. The downside surprise would be we come back inside of the NVIDIA candle and we are putting some pressure into next week. Okay. So, having a nice rally, the market's up this week. Tomorrow's a no trade day because of the holidays. Friday is limited trading. I'll still be live with you all on Friday morning. I'll probably take a similar approach to Friday like I did today. I'm curious what the market does from 9:30 to 1 when it's open, right? Limited trading hours, but it's still some movement for a few hours. One thing I'm curious. It's like, could we sell like a Monday? I'm just wondering if this is any good right now. If I did like a Monday trade, and this might be a terrible idea, by the way, but if I did a Monday trade for December 1st, if I went up in my option chain, okay, is it possible? Yeah, these strikes are so bad. So 69.30 are the all-time high, 69.20 and change. If I did a broken wing up here, that's a 2 delta. It's offer. I was going to say if this was offering like 50 cents or a dollar, I might take the trade because that's a tough move. We'd have to jump up, 100 and some points, and most of that have to come from today because Friday's limited trading. But the credits are garbage, so never mind. Yeah, I'm good with today. Just hanging out. Let's do a quick spot check on some waterfall income really quickly, and then we're going to play a little segment. Waterfall income will resume on Monday for a live trading session at 11:30. I do want you to check it out. So I have some new students that joined Waterfall Income this week. Please go into your classroom. Let me see where I pulled the classroom here. So classroom for Waterfall Income. Go into your masterclass and live sessions. So if you jump into my Waterfall Income class, I have a lot of masterclasses I've taught the last couple months. The latest would be November 11th and 14th. That is a strategy 1 and a strategy 2. Very different. Please go through this material. I will teach this again live probably in the next couple of weeks. But check it out if you want a head start. Greatest catch up is to watch the master classes, the most recent ones, and then you're ready to trade with me on Monday. Because Mondays are a trading session. We're usually live for about 30 to 45 minutes. We jump right into the markets. So we'll review our current positions. I do have some stacked up right now. Here are how the waterfall income trades are doing at the moment. Right now, I have one trade on XSP. It is up 21%. I have some trades on SPX. This is a strategy 2. Let me get this up here. So this one's up $5 or $10. This one's up $10. This one's up 15. I'm just looking at percentages here. So, it varies. I mean, if any of these are like, this one's pretty good. This one's up 65%. I like that trade. I said this yesterday. I mean, if you want to take profit in this trade, that's a nice winner. I'm going to hold this one a little bit longer. This is out to January. It's 51 days out, but we have like a 16 or 17% buffer for error. So I do like this trade a lot. We have about $700 in credit that is expected with potentially $11,000 in profit traps. None of those are expected. But if we land a profit trap, that is thousands of dollars of potential profit. So anyway, the nice thing is I think literally every waterfall trade is showing profit. Profit, 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 profit. It's not bad. Yes, they're open positions. Yes, they're stacked. Do I manage a profit now? Probably not. The strike that I need is price to stay above 58.10. I think we do that. Price needs to stay above 5,700. I think we can do that. Price needs to stay above 59.75. I think we can do that. Price needs to stay above 5,800. I think we can do that. Right? Like in the next 30 to 60 days, I don't see a ton of disruption to this market. Keep the party going. The Fed doesn't take away the punch bowl. Keeps his mouth shut for the holidays. If Russia-Ukraine conflict gets resolved, great. Just don't do anything, like no surprises. If the market's not surprised, we'll probably just kind of go sideways. If we have any non-surprise, like the market might surprise us to the upside because that positive drift, it's like, oh, sentiment's back on. More bullishness maybe. Okay. All right. Let's see here. Okay, gotcha. All right, so waterfall's looking good. Today's price action, just super quiet. And that's okay. Even my daily profit play would still not be filled. So I don't feel bad about just sitting here waiting. Either price has to come to me for a daily profit play, which it's not right now, or my VIX high in calculation for defense, it has to, price has to go up. Like the only way that would be a good trade today is if you're trading a very aggressive at the money, or like at the expected range. That's about the only way you're getting a decent premium today. And I'm not going to take that trade. If you were a little bit more aggressive, like maybe doing like an iron fly at the open, that could be a good one today as well. But I'm not going to attempt it. Usually those take on about 300 to 500 bucks of risk. So I'd say no, thank you. We'll talk about that on Monday, David. I'm not closing anything right now. I'm not closing anything. The only trades I would consider closing on waterfall are the ones that are over 60%. So let me look at my percentages. This one's up 42%. This one's not bad. If you want to close this one down for like 65 or 70%, that's a good fill. Like you've been in the trade for 8 days, it's already up $70 out of the dollar. Take the profit if you want. I'm okay with not taking profit right now. If I want to take profit on this dollar, it's like I'd want to take it really like less than 20 cents, 15 cents, 10 cents, something like that. Otherwise, we got a profit trap for $1,000 and it's 15+% lower than current price. So I'm good just kind of hanging out. I mean, I intentionally stack these trades up with these expirations where into December and January, if the market doesn't give us any crazy surprise, then these should be plenty of distance out of the way. The only one that is my high strike is like the 64.75, but that's also $1,000 profit trap risking like 450. So there's a bit of risk there, but my profit trap on any of these trades would make up for that and still double the risk. But nice thing is you look at these stacked up and they're all looking pretty sweet. So markets don't do anything stupid. And even if they do, honestly, it's like if the market does something stupid, look, it did something stupid on November 20th. It did something stupid on October 10th. If we do something stupid and we have something stupid and there's no follow through and it's just absolute whipsaw, our trades are still fine. Like right now, it's like if the markets don't close below these major sell-off days, we have one trade that's in jeopardy right below those lows, and I put that there intentionally at the 50-day moving average. Everything else is below the 200, way below the 200, and freaking like 5,700, 5,800, way down here. So the market has to do something pretty nasty for any of those waterfall trades to really be threatened. And that was by design. So, all right. One more thing before we throw this up, Blake. Let me go into pinch point. I'm going to search for my pinch point scanner. We've had a couple more trades close out for winners on pinch point. Let me go into the scanner here. I'm just curious right now if we have a decent list of go stocks. I've got 31 in go. Right now is not exactly the time to be like taking a bunch of pinch point trades. I'm probably going to get a little bit more intensive on these once we come into either end of the year to position for like a good Q1, maybe going out to like March, April for a swing. That's when a lot of volatility comes back in, is once you get through that January OPEX and mid. It's like January 16th is the expiration. So I say that because a lot of this right now is like what is in motion is either going to like lightly stay in motion, or there's such little volume for the rest of the year that, I don't want to put on trades and be, hoping that there's direction when there really might be a limited amount of movement, right? So I'm good just kind of spot checking. Like we've got some trades filling up. That's fine. We got 31 trades available, but these could also still be pinched over the next 15 to 30 days. And if these are pinched towards the end of the year, excellent, because I'll probably position for like a March, April expiration for a swing into a Q1, Q2 next year. So just want to see where we're at, how many trades are pinched. And also, do we have any headline names? Chewy, I've traded a lot. I made some good money on Chewy back in the day. If anybody's a pet lover out there. And then there's some other ones we've taken a look at before, but all right, I'll earmark that. So before I wrap up for today, we're going to play a little waterfall income. And this afternoon at 1:30, I'm still going to do another segment for Anatomy of a Trade. So if you have some discussions, you have some strategy questions, come into my segment today at 1:30 p.m. It's youtube.com/Chris Pulver or youtube.com/Financial Wars. Come in, be active in the chat. Let's have a fun session. Yesterday I ran for 2.5 hours. So until 1:30 p.m. to the close of the day, I ran Anatomy of Trade, and then we blended it into like a 30-minute close. So come on in, say hi. Let's talk some shop, and that's what we'll be doing this afternoon. Okay. All right, Blake. Let's fire it up. Let's do a little waterfall income. Class for waterfall income will be Monday.